Hi everyone, I'm Laura, the data manager at Avix. Today, I'd like to discuss with you why user sentiment serves as such a crucial quantitative metrics within the cryptocurrency market. First, there's a consensus that the crypto market is highly emotional. As the adage in traditional market goes, markets are driven by human psychology. This holds even truer in crypto space, as it is inherently more sensitive and fragile. Often, a single news headline, a specific piece of information, or even a tweet from a prominent figure can trigger significant market turbulence. For instance, the recent geopolitical tensions between the US and Iran have directly influenced the price movements of numerous cryptocurrencies over the past few weeks. Similarly, a single tweet from Elon Musk can instantly trigger a massive wave of buying and selling activity. This phenomenon stems from the crypto market's high volatility and its 24/7 trading schedule. Events impact sentiment almost instantaneously, and market prices in the short term are frequently driven by these emotional shifts. Consequently, herd behavior, where large numbers of users rush to buy or sell in unison, can easily cause prices to fluctuate violently within a very short time frame. Given the profound impact sentiment has on the market, we can utilize quantitative methods, such as analyzing social media buzz, search trends, and forum discussions to observe and even focused market movements. A currently popular metric known as the Fear and Greed Index serves as a prime example of such quantitative sentiment analysis. Calculated based on factors like social media sentiments and trading volume, it is prominently displayed on platforms such as Forza News and Binance Square. We often observe that when this index falls into the extreme fear zone, the market may present oversold opportunities. Conversely, when it surges into the extreme greed zone, it may signal an increased risk of the market becoming overbought. A dynamic I believe many of you in the audience are already familiar with. So, what other utility do sentiment indicators offer? First, they enable us to identify and capture instances of irrational market behavior. Second, they can provide valuable leading signals. For instance, during the tail end of a bull market or the onset of a bear market, on-chain metrics may still suggest underlying strength. However, sentiment indicators may have already begun to signal the impending risk of a market reversal. When the intensity of community sentiment and public disclosure spikes significantly, it often serves as a prelude to a shift in market direction. Although the crypto market reacts to specific events with remarkable speed, the broader public sentiment still requires a certain amount of time to fully coalesce and take hold. As traders, if we can successfully capitalize on the brief time lag, we can effectively catch the sense of the shifting market winds in real time. Therefore, paying close attention to user sentiment is a critical practice within the cryptocurrency market. Understanding and mastering the shifts in user sentiment will enable us to navigate the complex market with greater composure and rationality. If you are interested in more detailed community sentiment metrics, such as rankings of mention volume across various categories, the velocity of attention shifts, or the intensity of sentiment deviation, we invite you to visit our official website as www.cryptorecord.network. I will also be sharing practical cases, studies, and applications in upcoming videos. Thank you. Bye.